All right, so let's look at a few things. All right, I want you to look at these ratios. From this side, it is short. This side is long. Brokers list their open position ratios. Now, let me quickly explain this. You want to not be on the side that's losing, which is retail traders, because 90% of retail traders lose. We don't want to be with them. We want to be on the other side. As retail traders dominate one percentage too much, for example, if too many people are short, too many people are long, then the market will tend to do the opposite. So what you need to do is you need to start to think to yourself, okay, once a market has gone 70% too far in one direction, then that is starting to be oversaturated. For example, gold, I always say at least 80% plus for gold and Bitcoin and metals and silver, and 70% for forex pairs. But still, even 75 almost where it is right now is a bit much. And as you can see, gold is, we were able to catch some short moves this week off of gold, and avoid going too heavy into longs because we knew of this. So let's review also a few other concepts that are important to you. So I want to also show you, we're looking at trend lines and everything. Let's just look at this from scratch. I'm going to explain everything that works pretty well for gold. Take it with what you will. So this indicators that I like, and similar to what banks use, is just an EMA indicator. Simply you go to trading views, go to strategies, and then you type in EMA. And I like to use 7 and 30. You can use 9 and 21. All the 20 and 50 might work. I don't know. You got to see what works for you. And then, all right, so we know that too many people are long on gold. So banks are probably going to do the opposite. And we also watch the 10-year Treasury note. As this is performing well, this just broke 1% this week, and that's another thing. You can see how it's been, doing pretty well, and it's been trending up. So if I see Treasuries are very strong and gold is weak, or vice versa, then it kind of goes hand in hand. You should, as a gold trader or metals, you do need to watch 10-year because money might be flowing into this, and also money's flowing a lot right now into Bitcoin. So you have to have an idea of all the different things. Going on Market Watch and looking at different pieces of the puzzle and seeing where market money's flowing. So the money was not really in gold this week. Money got dumped from gold. Gold also broke a trend line. It's right here, right? You can see how it broke this trend line. And I also want to show you also thing that gold does. So gold is a breakout type of formation. So let me go over. You have to play around with this a little bit to get it to work, but it will eventually do it. So okay, now I can get it. So gold is a breakout formation. Gold makes these types of shapes. Okay, this type of shape. Okay, it stalled out, came up here. This was a breakout formation. Okay, breakout. This, I think we called this a while ago. Right, this is how I knew it was going to break out. Gold will make these breakout types of triangles, pennants, whatever you want to call them. And this is a bullish pendant because the top is flat. Okay, gold then made another one up around here, right around here, made another one, right? And then not only was there an EMA crossover, but gold really just kind of snapped all this bullish momentum. It's kind of sloppy to see the trend line, but that's what happened. I wasn't super aggressive here. I really wanted to see it perform a little bit better. It was on a major trend line. I think I have to go to, let me show you this, is you have to go really here. Yeah, this was a difficult trend line area to buy. This buying up here is not a good opportunity. It was too risky to buy this this type of this breakout, and we didn't see the type of breakout formation I really like. So I didn't go long up here, right? We did get a temporary break. We got about almost a 20-point move, and that was about it. And then we've had another breakout formation. Remember, this was a much cleaner, easy to see move. So if I go to zoom this in, you can see it's a little bit sloppy, but basically this was another breakout formation, and this is what I highlighted. But now this breakout move is after a move down, so this is more likely to break out to the downside than the upside, and that's why I said it was more likely to fall than to go up, and that's why we were more on that side. Now, for example, let me just make sure you understand this. If, for example, say this move down here didn't happen, say instead up here gold just went like this, it went up and then it made the same type of shape to some degree up here. Say it did it up here. Now what do you think? Well, in that situation, more likely to go up because the momentum is here. Even if it made just a standard, it could have even made a symmetrical triangle. I would say that's more likely to go up. That's what we would have wanted to buy on the road to 2000. That's what we were really waiting for. That's the type of breakout formation. Next, we didn't have any type of catching. We didn't have any type of. We have a little bit of here, but we didn't really have any pause. Then we had around here. We had a long wick, right? So we want to be patient. We want to wait for some kind of accumulation for gold. We want to see, will it make another pendant down here, right? Will it make another pendant, and like we did before? If it does this again, right? If it makes the same type, it could. Where would it be? Down again, down, right? Or we have to see. We have to really see what type of accumulation happens here. If gold could make a W, and I would want to buy a W. For example, this would be a W. Then I would want to buy it up, and I would try to maybe. This was an area with some accumulation a little bit, so I would say, yeah, it's possible we can get up to around here if we actually did get a very strong type of type of pause. So ideally, using this, we know that we are still kind of, the shorts are mostly the retail, or not the retail, the big money, and they have the edge, and that's why this market's coming down, and they have taken control of this market, and they can continually keep bringing this down, and there's not a whole lot. I hate using TradingView sometimes because it's so many clicking, but where we could even come down to this support again, or even down to 1865. We have a lot. There's not a lot holding it back from another serious drop. But then from here, I would say there would be a major opportunity to buy it on a bounce down here. I think there would be a good opportunity. But we've broken this major trend line. It was broken. Once this happened, there's not a lot holding it back now from coming down. Now it's halfway there. It's kind of 50-50 what could happen here. It could do even this. Now I have to kind of zoom in a little bit just to show you. So let's get rid of all these different things. I'm going to show you this in real time. Everybody makes it look easy, but there's a lot of buttons to press. So, right, you draw this. Now this trend line at the top is in play, right? I think we could even go. I think it's possible if we come back up to this trend line here. I think this trend line up here is going to be in play. I think that this is going to be what happens. I don't know what's going to accumulate down here. There's a lot of what if. We have to kind of wait a bit and see how this forms. I'm not rushing to get into gold next week too much until I see some action. But yeah, I'm really waiting to see where this goes. Ideally, I think it would make more sense to wait for a big push up here and then try to short again up here. That's what I really would want to do. But I think buyers may try to push this up a little bit. But that's just my guess right now. I got to kind of wait. There's not a ton that you can do. But let me show you another pair that you can trade. The Great British Pound, Australian dollar, for example. 79% of clients are long. Now, you would think it would have gone up if so many people are bullish, but that's not the case. This market has been trending lower. Look at this, right? So I think this major trend line, it's a lot easier, this one. I would say that this major trend line is in play. You know, the average, the gold is above the blue. So I would say that this is going to continue lower. The longer average is above the shorter average, so the market could keep coming down. I would say I would want to wait for another push up, wait for a long rejection wick, and then I would want to short it on the way down. Once I get that rejection, then I would have the market more in my favor. So that's really how we kind of piece it all together. We're not trying to being a little bit different. Really, you just want 70%. 71% is pretty good. I want to kind of be now on the long side. I'd want to wait for a bullish trend to resume. So you really just, you go to the opposite and you wait for the trend to really kind of coincide it. That's where you'll find the best opportunities. But you need to also understand the fundamentals of what you're trading, like gold. You need to watch the treasuries. You need to understand what news events are being released. Don't read too much into them, but just enough. So I hope that makes sense. Keep it kind of simple. Don't overthink this. These are just tools, and you have to. And I hope I showed you how to put them all together in different ways that you need to do it. But you need to, put everything together from the candlesticks to the price action to the trend lines to the averages, indicators. Everything is a layer. And when you have all this together, I think you have good reasons to enter either way. So I hope that helps, and let's have a good week next week.